Welcome back. We're going directly to the trading floor in Chicago. Joining us now is Larry Levin. He's president of Trading Advantage. Larry, good morning. And it looks like it is a pretty good morning for the markets this morning.
Yeah, absolutely. If you're a bull and you're long these markets, you're looking real good. The S&Ps are at record highs. This is all obviously based on the Fed talk that we had yesterday, talking about more quantitative easing, not going away anytime soon, and that's pushed these markets up really at the overnight session and certainly right here on the open.
We talked to a technician a couple of days ago. His top position was being short. The spiders, were there a lot of people caught offside here, Larry?
Some, right? A lot of people came in and put short positions on, which they hadn't done in quite a while when the tapering talk started from our Fed. And then, obviously, they reversed the situation yesterday. So certainly a lot of aggressive traders put on short positions. But I think most people knew that the tapering wasn't going to come all at once. And so I think that made some people hesitant. If you were short either the S&Ps that are traded behind me or the spiders, you certainly had a little bit of trouble, and you probably had to average out, meaning sell higher as the market went up, and certainly sitting on the highs, you're not looking very good right now.
You know, Larry, we were sitting here earlier, and Frances was looking at the chart of the U.S. 10-year over the last couple of months, and she said, you know, if this was a stock, there'd be people wanting to short this. Look at how much this yield has run up. What's the sentiment like out there?
Well, it was interesting because really, certainly in the 10-year, the yield 2.5 was the big number that we would kind of come up and then bounce against and then come back down. And obviously, we're above that now. And that's really, again, Fed-driven, right? I don't think we'd even see any kind of situation like that if the Fed hadn't come in and warned about tapering. But once they did that, we saw those yields fly up really in a 1 or 2 day process during 1 or 2 trading days. And with that being the case, you know, you've wanted to be long yields, you've wanted to be short bonds. Obviously, they trade inverted from each other, but it's been an interesting trade. It wasn't very exciting until the Fed came out and started talking, but they brought some volatility to that market, no question about it.
Do people want to get too far ahead of themselves being long stocks here, Larry, in the face of, we got J.P. Morgan, Wells Fargo tomorrow, and then, of course, the next 2 weeks is really an onslaught of earnings, not just second quarter, but outlooks as well. As I said, do people want to get too bullish in advance of that?
Well, you know, if we hadn't had yesterday, Francis, if Ben Bernanke had come in and said, look, we're going to keep this QE going, and we need, it really basically said he needs to keep it going because the economic undertone is not strong enough to pull it away, right? He really kind of spooked the market when they stepped in and talked about tapering. So if that hadn't happened, then I'd absolutely agree with the statement you just made, that you want to watch out for these bank earnings. You want to watch out for some of the bigger things that are coming out, because there would be volatility in the market. But unfortunately, if Ben Bernanke came in and kind of stepped on that trade, right? Because he basically said, no, we're going to keep the QE going. And so even though corporate earnings would be something traders would pay attention to, there may be some knee-jerk reaction, certainly to the individual stocks as those earnings come out, but to the overall market also. You know, that really is kind of off the table now with the Fed's doing what they're doing. And a good example is us opening 18 points higher in the S&Ps today, and certainly on a record high.
So, Larry, you would take what we got from Ben Bernanke yesterday and the action we're seeing in the markets this morning is not like a short-term move, but this is a longer-term statement about where things are going to go for some time to come.
Yeah, absolutely. And I'm a professional trader, so it's not, you know, really in my list of trades that I do to want to buy the highs. But you've really had no choice but to do that, to buy the highs, because Ben Bernanke has made it kind of no other trade, right? The market keeps going up on this Fed talk. I think it's going to keep happening. Certainly, they're not going to come out next week and be like, okay, forget what we said, on Wednesday, and now we're going to taper again, or we're going to at least start, talking about tapering. They're not going to do that next week, and because of that, this market's going to keep running up. And I wouldn't have thought this, but certainly 1,700 in the S&Ps is in play. We're not that far away now.
All right, Larry, we'll leave it there. Thanks for joining us this morning.
Sure.
That was Larry Levin, president of Trading Advantage, joining us from Chicago.
And that's